done. Live on LinkedIn, live on YouTube. Let's get the comments rolling and let's begin. Yeah, everything is great. Everything is great. 8:07, though we're late. Everything is great, but we are a bit late. Good morning, Mr. Tarun. Good morning. How are you doing? If you can hear me, let me know. Let me know if you can hear me. Got people coming in. That is very good to know. I am live on LinkedIn. I'm live on YouTube. Good. I'm audible. Perfect. I'll just check myself on LinkedIn. Good morning, Mr. Tarun. Good morning. How are you? Perfect. So live on YouTube, live on LinkedIn, audible everywhere. Let's begin the show that we deserve. The show that we deserve. We deserve it. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, a daily mental workout, a daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, you gotta follow tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip, right? We'll all sip something together and it'll bring us good luck, as it always does. Always, every day, without fail. And all you need for the simultaneous sip is a cup or mug or glass, a tank, a chalice, a stein, a canteen jug or flask or a vessel of any kind. Pour it with your favorite liquid. Today I'm having green tea with some black pepper in it. And here we go. Oh my god, it's so beautiful. So beautiful. Let's do it again. Sublime. You know what the simultaneous sip says, right? You know what it says? Don't be shy. Don't be shy. You know what it says? It says that you're not alone. It says that we're in this together. And that's such a nice thing to say. With that out of the way, let's begin. Let me fix the LinkedIn title. The streaming service is giving me problems. Giving me problems. Daily discussions on business and finance. Yeah. Good, good. Yeah, now LinkedIn is sorted. So first things first, a personal story as well with this. Swiggy has looked at a great loss of about 1200 crores in the quick commerce business. Swiggy has got 1200 crores loss. You know, out of this 1200 crores, 896 crores, basically 900 crores was just quick commerce business, that was Instamart. And Swiggy is also looking at selling its stake in Rapido. Swiggy was one of the investors at Rapido. But then in Rapido is also looking at beginning its food delivery business. Now, Swiggy wanted to tie up with them in some way that's food delivery business doesn't hurt Swiggy's core business. However, that didn't work out. And now Swiggy is looking at selling. So Swiggy approximately invested some 1,000 crores into Rapido, but that stake is valued at somewhere around 1,400 to 1,500 crores. So it's just gonna take a 500 crore, or let's say a 30% gain on that investment and move on. Now Swiggy has blown up almost half of its IPO issue of 4,000 crores. It's blown up almost 4,000 crores as a part of its IPO issue, and in one quarter it's losing like 1,000 crores. Swiggy is not in a good state, financially speaking. It's not doing well. A lot of it has to do with quick commerce in general. It's not the company's fault. It Quick commerce is a perfect storm for a lot of people to lose money. Zomato lost a lot of money on quick commerce. Whatever earnings it made were because it has 15,000 crores in the bank, right? So a lot of financial income. And But Zomato's quick commerce business also lost money. Zepto's quick commerce business also lost money. Big Basket also lost money. Instamart also lost money. Then there's gonna be Geo. There's gonna be, who else is there? Amazon's gonna come in. Flipkart is gonna come in. They're all gonna lose a lot of money. So it's not the company's fault that the battle shifted to quick commerce, but the company is not looking well, so tight financially, and all these troubles are just gonna get worse because Swiggy is not really looking at adding more dark stores to its quick commerce play. Okay, it's already slowed down on the quick commerce store edition game. However, the daily number of orders per dark store have gone down. That means that the demand as far as quick commerce, uh, the demand for the quick commerce has not decoupled from the marketing effort. So the more you market, the more you discount, the more the demand is, just like it was in cab business. So the number of new dark stores coming down, orders per dark store coming down, losses piling up, no operational lever to sort of make it turn around. Things look bad for Swiggy as compared to Zomato. Now, whenever I used to talk about, so at my office back in 2018-19, when we were talking, we always used to have these discussions. Who do you think has a better shot of winning? Let's say Zomato or Swiggy, right? So a lot of people used to say Swiggy has a better chance of winning because, they like the product and so on and so forth. And I used to say, no, I think Zomato will win. And the reason for that was that Zomato had Sanjeev Bichhandani sir, backing them. Zomato had the blessings of Sanjeev Bichhandani sir. And Sanjeev Bichhandani sir is essentially an extraordinary entrepreneur. He's an extraordinary mentor and guide. His insights in the world are just next level, right? They're just unparalleled. And the way he talks is very different from everybody else because he has been there, done that. His every word that he speaks, it's born out of experience. He doesn't hypothesize, he doesn't theorize, he doesn't ruminate in jargons and theories. He's just talking brass tacks, ladies and gentlemen. And I had interacted with him, and I still do. And I had also interacted with Hitesh Oberoi sir, who is the CMD and CEO at Naukri, at InfoEdge, right? So Hitesh Oberoi sir is the co-founder of InfoEdge. And when we met him, a very tiny office, by the way, for a CEO of a $10 billion company, very tiny office, like barely 3 people can sit. And he was like, क्या पता है यार, क्या पता, मतलब अभी जोमेटो आगे बढ़ रहा है, अभी स्विगी आगे बढ़ रहा है, अभी ये आगे, कुछ नहीं पता इन सब चीज़ों का, कुछ नहीं पता. Now that's what I love the most because that's the essence of business building, right? कि तुम्हें कुछ नहीं पता. You don't know. It's a daily battle. And when I looked at those guys backing Zomato, I knew that Zomato will have an upper hand because Swiggy was getting backed by investors like Prosus and so on and so forth, Naspers. And that's good, that's great. But investors are money managers and entrepreneurs are shop handlers. And when you have great entrepreneurs backing you, you know, advising you step by step, leading you, guiding you, you have a much better chance of winning. And that sort of these things compound over time, right? These things, you know, uh, have a way of showing as far as time goes by. You see these things making an effect, and now you look at it. Now Zomato has a better market share in the food delivery business. It has a better market share in the quick commerce business. Both are losing money, but it has more cash, and it has a vertically integrated food delivery business where it also has hyperpure. It also has an event business, which is the dine, you know, the Zomato events. These people also, they have a ticketing business. So Zomato has diversified like crazy. Zomato has more cash. Zomato has better net. You know, even with losing money on the quick commerce, they are being able to show a net profit. And Zomato is now a $30 billion company, more than a $30 billion company, and Swiggy is lagging behind. What I want to say is the whole spiel that we gave all this while, that every business is a people's business, right? Every business depends on the people behind it. And the better the people, the better the business. It doesn't matter, you know, as much that what the business is. It could be the same business. It could be literally a carbon copy of business, right? But if the people behind that business are better, it's just gonna be good for them. So that's what happens. And now, by the way, this is not an original saying. I shouldn't say that I came up with this idea or thought or something like that. I read that in Bill Gates' book. So Bill Gates says every business is a people's business. And it could be a technology business, it could be a service business, it could be a commodity business, it could be anything. But it all depends on the people running the show, right? So Sanjeev Bichhandani sir, once again, hats off to him. I couldn't get him to back me, which is a very, very sad personal sadness, source of personal sadness for me. But yeah, maybe someday. Maybe someday. Or maybe you don't need them anymore, right? Maybe you develop yourself so well that you don't need anybody. So, not sadness, but yeah. Moving on. That was the first. Some comments. Mr. Tarun says, as you have talked previously, they are waiting for others to implode their business. Yeah, it's just crazy. The quick commerce game is crazy. The overall net losses of the industry. So if you look at, I'm not sure, I didn't read Zomato's reports, but Zomato probably blew up like 1200 crores in the quick commerce business. Swiggy blew up 900 crores in the quick commerce business. Zepto is a purely quick commerce business. They also blew up 1200 crores. So 2400 crores, 2400 crores plus 1000 crores, 1200 crores essentially, 3600 crores. Big Basket, I don't know what Big Basket lost. It must have been around 600, 700 crores. 1 second. Big Basket losses. 1 second. What did Big Basket loss? FY24 revenue grows, net loss narrows by net loss is 215 crores. So we don't know what Big Basket losses were recently, because these numbers are very Big Basket B2C losses widened to 1800 crores. 1800 crores in FY25. So that was, a Big Basket. Then you look at Amazon, you look at Flipkart, these people are losing $1 billion each on everything. So Mr. Tushar Tiwari says, so confident that you did not type PNL instead, just type loss. Because that's what it was. Mr. Tiwari, good morning. Mr. Shrujay Kalyas, just going off the topic, what do you do other than podcast? Well, I do a lot of things other than podcast. You can go to my LinkedIn. I have a startup. And then I also play music. So for a living, I'm basically a startup guy. Well, that's weird to talk. It's weird to talk about yourself that way, right? Let's begin. Now that was the first story. Every business is a people's business, and the better the people, the better the outcome. And someone just said it very nice, and that is Mr. Shirvastav. He also runs one of a very big IT company, some $250 million IT company. I'm forgetting his name, forgetting the company's name, but he said IT services business is is IT services business is essentially just the same business, right? It's IT services. You hire people on the bench, you try to get contracts from people abroad, and that's IT services business. Same business, doesn't differ anyway. In that same business, you have $1 million company, which is like an 8 crore company. In that same business, you have $100 million company. In that same business, you have a $500 million company, which is us, Mr. Shrivastav says. In that same business, you have a $1 billion company, which is like MyTree, right? In that same business, you have a $10 billion company, which is Infosys. So it's just people. It's just the team which does everything. So he was right, and so were we all. Moving on. Uh, Delusional Donald delivers rant on dead economy, Park Oil. So we've talked about this. We'll not do it again. I guess we all know. Viewers of Thinkers Frequency especially know what this is all about. Mentions Russia again in tirade, seen as pressure tactic. Now this is a new headline or byline, and this wasn't before, right? So nobody talked like that before, but we saw it first because it's essentially an arm twist on Russia, and it has started working because Indian companies like IOCL and all these refiners have stopped buying Russian oil from the spot market. So if that continues, if Russia or if that scales up in impact, if Russia starts seeing some problems with the Indian market, it's gonna probably nudge them in the direction of looking at ending the war soon, and that's the goal, to end the war. However, what must be said is Mr. Trump essentially fell out of favor. He didn't really stand the let's say the hope that he'll be an Indian ally, unlike everybody else. So that was essentially the target, the hope that Mr. Trump will be out of India's way. He'll not try to hurt India, and he'll be especially favorable to India. But that hasn't worked out at all. He, even in terms of speech, and not just speech, even in terms of some business decisions, let's say trade decisions, he's not been overtly favorable to India. Yes, if you take out the rhetoric right now, India has been in the most favored situation, right? Great tariffs, zero. Our electronics exports just go with zero duties, right? And they will still do that because Section 232 and all. So, if you take out the rhetoric, maybe India has been favored, but rhetoric has done a lot of damage to the relationship, is what I'll say, or let's say the perception of the relationship. So that must be said, and that's obviously disappointing for everybody. Mostly people who looked at it that way, because in his first term, he was very anti-Pakistan. He cut their money supply, he cut their support. He just basically left the country hanging, which was great news for India because no money to Pakistan means no terrorist attacks on India, free economic growth. But this particular term, he's favored Pakistan, and that should be said, and that should be sort of condemned, and it's very sad that that happened. Moving on, but a lot of it is rhetoric. So let's see. I am of the strong view that this particular thing is not permanent, and we should see things happening, let's say, in a couple of weeks, right? So that's the prediction. Speaking of something very nice, something great, uh, Bollywood, or let's say Indian film industry, has done some real smart work, man. Real smart work. So what they did was, Sayara is a movie, Sayara. It's basically, it was made on a budget of 45 crores, and it did 274 crores on at the box office. So budget of 45 crores, 274 crores at the box office. Now, I'm not sure if the PNA, that is print and advertising for a movie means the amount of money you spend to promote the movie. Generally, it's almost as much as the movie budget itself, right? So I'm not sure if that is the case with Seara, or if they are counting the PNA budget within the budget of 45 crores. But let's say 45 crores includes the PNA, right? The movie was made at 25 crores, 22 crores. They spent 20 crores on marketing. And they got a 274 crore box office. That means they got a 135 crore or 136 crore, 136 7 crores of net. So at a budget of 45 crores, they could make like 130 crores, which is phenomenal, right? And if a PNA was separate, is separate, so let's say if they spent like 20 30 crores, they still, 80 crores total budget and 130 crores of net. Generally, in the film industry, PNA is always separate from the budget of the movie. So you've got to read it like that. However, the movie has done very well. And the marketing tactic of this particular film has been very astoundingly smart, is what I'll say. Okay? So what they did was, and carefully, just listen to this very carefully. What they did was, they launched the movie in theaters and then recorded people's reactions on theaters and let those reactions go places. So instead of pre theater push, they essentially captured the feeling within the theater and got people moving. Now that is smart on two levels. Number one, it is smart as in you get people to appreciate what happened with the movie, okay? But you also lay the emphasis on not just the movie but the theater experience, because that's where the money is, right? So if you get people to watch your movie, if just the movie is your sell, the movie people will watch, but without paying for it in the theaters. So that will not be a great news for the story, for the movie, right? Because money is just in the theater business. Money is only in the ticket sales, right? So to get people to watch the movie, you've got to have people looking at movie in conjunction with the theater, right? And these people went to tier 2 markets, recorded people's reactions and let them go viral, right? And catching on that trend, people also started doing that. They started catching on that they were watching Ciara and something happened on their particular bit, and that sort of movement snowballed into a real financial success. Now, this is being built up as a new age revival of Bollywood or of Indian cinema, right? Indian movie industry. But you know which movie did just the thing unknowingly? Can you guess which movie in the recent past actually did the same thing unknowingly? Absolutely unknowingly. And it became a smash hit, a sleeper hit, perhaps the last great success of Indian cinema. Can you guess that movie? It was very controversial, very controversial, but it became a runaway hit. Let me give you another hint. It was a political movie, or let's say a political story. Can you guess? Can you still guess? I'll give you some time till I take a sip. Could you guess? Political movie, smash it. No, Mr. Tarun. Savarkar couldn't make its movie money back. Savarkar was a bad movie investment. It was the Kashmir Files. So the Kashmir Files essentially did the same thing unknowingly. They caught people's reactions watching Kashmir Files, ladies crying, ladies hugging Mr. Vivek Agnihotri, and people just like in tears, right? And those were real reactions. They caught them, and they went viral on Twitter, and the movie snowballed. So this particular move is a very smart move because it puts not just the movie in focus but the theater experience, because that's what's valuable. You just don't want people to watch the movie, because if the movie is the sell, people are gonna stream it illegally, people are gonna watch it on OTT and so on and so forth. The experience is the theater. That's the sell, and that's the sell that will make ends meet, so to speak, which these people did very well. Ciara and Sue from So. It's a South Indian horror movie. These people are. So now what we are gonna see is an overdue of this particular strategy. You will start looking at movies and people's reactions of movies. Earlier, this wasn't allowed. You weren't allowed to, do photography or videography, but now these production houses are getting into that game. So you will start seeing a lot of movie reactions, kind of videos going viral about movies, and then it'll just become another fad, and people will stop trusting those videos altogether. But for now, it's fresh and it's beautiful. Very nice. Let's move on. Big companies may get to list by diluting just 2.5% equity. So viewers of Thinkers Frequency would remember, we talked about this. Geo was looking at raising money from outside markets, from capital markets, from private markets, because it said, or it implied, that Indian market doesn't have the depth to absorb an issue like Geo, right? Geo is too big of a company, and it will not be possible for the Indian market to absorb Geo. So what SEBI panel has proposed, because it wants companies like Geo in the index, right? So what it has proposed, that you get to list with just 2.5% retail float. That is just 2.5% of retail float you can list. Earlier that limit was way higher. So that would probably, for valuations more than 12 billion, 1 lakh crore, you can do that. So that will attract companies like, Geo and others to actually list in the market. They'll have a small retail float, but at least the market would get to participate in that story. This is nice. This is good. Speaking of what's not nice, when you talk about one Ambani brother, you got to talk about the other one as well, right? ED has summoned Mr. Anil Ambani in loan fraud case. This ED thing is not going away from Mr. Anil Ambani. It's a problem. We've discussed this. Viewers of Thinkers Frequency know. When Mr. Anil Ambani and Rana Kapoor, they were tight and they were good. They were green. Yes Bank and Reliance had some questionable relationship, where Yes Bank gave them a lot of loans, and none of those loans got defaulted, by the way, till Mr. Rana Kapoor was there. But those loans seem to be given against kickbacks. So Yes Bank got screwed. We all know what happened to Yes Bank. From 435 rupees, the stock basically became to zero. Right? Yes Bank was essentially a worthy competitor of Kotak Mahindra Bank. It was such a great company, great retail franchise, and so on and so forth. One of the market leaders in corporate banking, but it just went to zero, right? And when that went to zero, everything that Mr. Rana Kapoor touched also became circumspect. So Mr. Anil Ambani is under fire, ED fire, for the loan fraud case, and that's trouble. That's trouble. Reliance Infra, is trouble. Moving on, Tata Motors is moving forward with a 1 billion euro fundraise for Iveco, acquisition. We talked about Iveco getting acquired by Tata. Tata Motors is looking at acquiring Iveco from the Agnelli family in Italy for $4.4 billion. This is the largest acquisition by Tata Motors. It's twice as large as what it did with JLR, Jaguar Land Rover, many years ago. That was a $2.3 billion buyout. This is 4.4. This will bring us the truck business. This acquisition was not being looked at very favorably from the stock market because Iveco started getting a lot of money from the defense business, and defense business was demerged from this deal. So no defense deal here, just the tractor deal, truck deal. Sorry, not tractor, truck deal. So that's going on. They're raising money to make the deal come through. Moving on, markets got hurt a little. Adani Enterprises profits down 49% on weak coal biz. So we talked about it, I guess, where we expected Adani to do well, earnings calls wise. Adani did well, but the bright spot was the airport business, the infrastructure business. The coal commodity trading business didn't work out so well. Adani is such a big empire. Adani Enterprises encompasses such different industries, ports, airports, coal, and so on and so forth. But coal has a great role to play as far as Adani Enterprises earnings are considered, and that brought down the profit to 49%, which is not a great news. Speaking of earnings, HUL has surprised everybody. So viewers of Thinkers Frequency know we discussed a lot about this, how HUL was essentially looking at HUL is essentially a proxy for the Indian consumption story, right? The biggest FMCG company of India, and whatever HUL does is looked at very, very strongly because that determines what the consumption story is. The last quarter, HUL's revenue went up 5%, highest in 2 years, right? And net profit rose 6%. Quarterly revenue 5% up, net profit rose 6%. Gradual recovery. Now, this is another lesson which we've talked about a lot. We often think that we are responsible for our careers, right? We are responsible for what we do. We are responsible for what happens to our lives, and so on and so forth. Now, just look at this. This particular CEO of HUL, Mr. Java, I guess, he was struggling for 2 years. Okay, nothing was happening. India's market was low. It was in a terrible shape. The consumption story was going down. It was really a clogged toilet, right? HUL's earnings were bad. The stock wasn't growing. Everything looked very, very, dicey. The guy was fired in 2 years. All right. Just as he was fired, and a new person was supposed to take up, the last quarter showed revenue results 5% up and profit 6% up. So what his strategy was to raise up the volumes and take a hit on margins, but then, since volumes will go good, it worked. It just took 2 years, but by the time it worked, he was fired, right? And then this new lady comes who's been leading the beauty business in Europe, and she comes, and suddenly the economy also starts looking brighter. The interest rates come down, right? The interest rates come down, the economy starts looking brighter, the core commodity prices reduce, the margins expand, and every strategy that the previous guy had worked on, it starts showing results, and she starts looking great. While the other guy's career gets set in, it basically sees a sunset. So what did we always talk about? We always talked about, I'd rather be lucky than good, right? Mr. Woody Allen, I'd rather be lucky than. The man who said, I'd rather be lucky than good, saw deeply into life. People are often afraid to admit how great a part of life is dependent on luck. It's like a match where sometimes the ball hits the net and it goes forwards and you win, and sometimes it doesn't and you lose. So not everything is under your control. So just relax. That's the lesson. Moving on. Tata Trust is putting faith in Mr. Chandrasekharan, so his term will be renewed, which is nice. Whoop, woohoo, claps, Mr. Perspective. Thank you. Like करें, इसको share करें, like करें, share करें. Right. Speaking of like करें, share करें. Supreme Court is gonna hear that case again. The JSW and BPSL case. So viewers of Thinkers Frequency know about this. We've talked about this a lot. These people acquired BPSL, Bhushan Power and Steel. They invested a lot of money, thousands of crores. They took a debt to take that acquisition, make that acquisition happen, and so on and so forth. And then 4 years later, Supreme Court said that this acquisition is illegal. Okay, and you got to return Bhushan Power and Steel to the lenders, to the banks who were trying to sell it. You'll get a refund from them, and you can all go screw yourself. That's what Supreme Court said. But JSW said, but we took a loan from foreign banks for this acquisition, and we invested a lot of money into Bhushan Power and Steel to make this acquisition work for 4 years. We got like tens of thousands of crores that went into it. Who's gonna pay for that, right? Then Supreme Court said, oh, wait. So it stayed its order, and now another bench is looking at it, and they are basically looking at it again. They're saying that maybe the first bench order didn't look at all the facts properly. The judiciary, Indian judiciary. When I first read that, now you would remember, viewers of Thinkers Frequency would remember, when that happened for the first time, we said, what? Get out of here. That's our reaction, right? What? How do you do that? How can you call an acquisition illegal after 4 years of its commencement? It's like, you have a baby, and then after 4 years you say that this baby is illegal. That's not possible, right? It's just bad analogy. Analogies are not the right way to think, but you get the drift. It was just unbelievable, and the court has backed down. What is all this corruption going on, Mr. Perspective? I don't understand. What corruption? US sanctions 6 Indian firms over Iranian petrochemicals imports. India did a lot of Iran and Russian trade while the wars were going on. Mr. Trump is looking at punishing that. He's also announced a trade deal with Pak to develop oil reserves. He says maybe someday Pak will sell oil to India. What a shitty thing to say, right? Well, pretty shitty. Apollo entities seek nod for recast plan. So we've talked about this. Apollo group essentially has, Mr. Tarun says, and all capital is also tied up with the business. JSW isn't making any progress with it. No, JSW, Mr. Tarun, has made a lot of progress, by the way. JSW is killing it at all fronts. So they went forward. Bhushan Power and Steel acquisition worked really well for them personally. It's just that the court ruling turned out to be trouble. Otherwise, the business is booming. I'll tell you about JSW also announced its earnings, and they did so well. And now they're going to start their own car company. It's amazing. And they have a plant in US for steel or something. Amazing. It's just extraordinary. Whatever. JSW is also bought a paint company, the Japanese paint company, which has Dulux brand. Amazing. So just in the last couple of years, or let's say last 5 years, JSW has acquired Bhushan Power and Steel. It has gotten into the paints business. It has a very successful relationship with the Chinese car company MG Motors, and then it also is starting its own car company. While everybody is unhappy with the tariff situation, JSW is hedged because it has a plant in US. So JSW is very happy. But Apollo entities seek not for recast plan. So Apollo entity was looking at demerging its hospitals with a pharmacy and a telemedicine kind of a giant. So 16,000 crores in revenues for distribution and digital health platform. So basically, it has demerged its hospital business from another entity to form another entity where it is an omni-channel pharmacy and digital health platform, online and offline pharmacy and digital health. So this particular bid is a very interesting thing because it's going to lead to very good outcomes as far as fundraising is considered, right? Hospitals, while having a lot of M&A activity and a lot of private equity activity, have a very low return on capital, right? Not great return on capital. But the pharmacy business and online pharmacy, offline omni-channel pharmacy, and the telehealth business, the telemedicine business, that has a better chance of attracting new money and then showing better returns on capital. So it's demerging that, it's seeking CCI approval, and once that is demerged, it will have a entity which will be like 16,000 crores revenue, and then it's going to raise money and so on and so forth. And this particular bid will be sort of reflective of a sector, right? So once this particular bid forms, you will be able to invest in a company if you are looking at rising troubles, as far as just as we discussed, right? What happens when there is social unrest? What happens when there is economic unrest in the country, right? The medical industry booms. But medical industry is very muddled, right? Medical industry is hospitals, it's everything. But you need an indicator which is dependent on cyclical movement of uh, you know health troubles or financial troubles or economic troubles. What would be a stock which goes in that direction? So this could be that stock once they list, so on and so forth. So something like this, you know. Manipal is doing the same. Ministry is exploring a franchise route with NH wayside amenities on private land. So National Highways wayside amenities, they are looking at sort of monetizing activities, franchise route with the wayside amenities project. So that's good. National highways, they really need a lot of wayside amenities. US levies may hit growth, but local demand will soften blow. Uh, Seems like we should invest in JSW, says Mr. Ankit Jindal. By the way, Mr. Ankit Jindal is also a great entrepreneur, and he comes from a family of great entrepreneurs. And his family is also into steel. Speaking of steel, tough time to be in the steel business, right, Mr. Jindal? Because of everything. But yeah, viewers of Thinkers Frequency are smart people, resourceful people. That's very good for us. Moving on, very importantly, US levies may hit growth, but local demand will soften blow. Okay, so says economist. So what does this mean? This means that Indian economy is a $4.2 trillion economy. US exports are 100 billion exports. Okay, they were wanting to take them to 500 billion, but currently they are 100 billion, about 89 something billion. Okay, 88, 89 billion. Out of which India makes like 40 billion in trade surplus from US. So US is one of the very, very few countries in the world where we have an actual trade surplus. But in the grand scheme of things, it's 2% of exports and 1% of the net surplus, right? Of the surplus. So it is not that big of a deal as far as tariffs are considered, as far as the economic impact is considered. Yes, it means a lot. 90 million, billion, 100 billion is not a small amount. And it leads to cascading effects of different kinds, right? Once, let's say, we talked about cascading effects. If IT services, just the IT services industry faces even small stress, things happen. But what economists are saying is that India is a largely domestic demand driven economy, unlike China, which is an export driven economy. So it will not be a big deal for us, say economists. But I don't think they're right, because what they're not seeing are cascading effects, the second order effects. Moving on. Google ready to let real money games play if self-declared. So government actually cornered Google. They said, why are you letting these real money gaming apps work on your platform, on the Google Play Store? So Google Play has said that if they get certified with some sort of federations, there are federations of fantasy sports and so on and so forth, they need to get self-declared a declaration from these federations, and then we'll allow them to play. Right? Third parties to examine developers' claims. So whatever developers are claiming, that we are not a game of chance, we are a game of skill, and so on and so forth, we let those claims work out by themselves. So it's essentially a free hand for all the money, real money gaming apps, right? Which basically confirms our long held belief that money talks and bullshit walks. Nobody can stop the flow of money. Real money game betting apps make a lot of money, and so they will go with a self-declaration or like a shoddy federation declaration, right? Moving on. Now all of those federations would have those guys themselves, right? So how does it matter? It's just a sham. Moving on. Ambuja Cement, that is Adani owned, Adani Group cement business, its net jumped to 970 crores. So Mr. Tarun would remember, we talked about infrastructure related projects. The net jumped 970 crores. That's Adani owned cement business. Above normal rainfall expected in the second half of monsoon. Mr. Tarun says, maybe look for a job in that federation as it's going to see good donations. Makes sense. Makes sense. JSW Energy Q1 profit up 42%. That's what we were talking about, Mr. Jindal. JSW Energy is also doing well. So when coal and all these, players saw dips in their profiles, JSW Energy really went up. Why? Because it's one of the early players in green energy. So their green energy play is strong. So once again, JSW, green energy, the car company, steel plant in US, steel doing well, Bhushan Power Steel investment, and paints business. So my God. ePay companies stuck as small value UPI SOPs dry up. So we have talked about this. Banks and ePay companies essentially were looking at some sort of, firstly payment aggregators were looking at some sort of incentives. They used to get incentivized for promoting UPI payments, but those incentives were taken away. They said we need some sort of MDR kind of a play. MDR is merchant discount rate, so that we can make some money, right? That what the government said no. Now government has also put down the SOPs, the incentive schemes on the banks for promotion of UPI, which is bad news for banks and also the ePay aggregators. So earlier, the finance ministry reduced incentive for processing small value UPI payments at small merchant outlets to 0.15% per transaction from 0.25% per transaction. The incentive was paid like 12 to 18 months, but now it's going to be a bit of a problem. So this particular bit, is going to hurt not just banks. Small merchant, by the way, 20 lakh, less than 20 lakh payments in a year. So this particular play, the decision to cut the subsidy reflects a drastic reduction in budgetary allocation for digital payments incentive to 1,500 crore in FY25 from 3,500 crore paid last year. So banks are saying that we're just going to bring these costs to the payment aggregators, man. We got to feed the monkey. We're going to take out the incentives we're gonna ask the payment companies to cough up. So obviously that is bad news. But the government has said we've given you enough incentives, man. Now UPIs are thriving. So government's perspective is that UPI is thriving. Okay, host UPI for free. Don't make money on UPI. But then when you've gotten UPI transactions happening, use that to sell other things. Sell financial services, sell insurance, sell whatever you want to sell. Do recharges, but don't ask us for money, you bhikaris. Anyway, agri value chain gets twin push with outlay on processing and co-ops. Cooperatives are the lifeblood of this country. Amul has done a great job as a cooperative. It's perhaps a miracle in India. It's done such a good job. And government is looking at agri sector to also have as strong cooperatives as possible. And it's a twin push. 100 lakhs to set up 2.9 crore cooperative members to benefit from the NCDC scheme. Okay, NCDC scheme. So a lot of schemes. There's Pradhan Mantri Krishi Sampada Yojana, 6,500 crores. Then there's NCDC, National Cooperative Development Corporation, with an outlay of 2,000 crores. So a lot of money going. Now, when we used to hear Mr. Modi's speeches from 2012, he used to talk a lot about cooperatives and how Amul, because he's from Gujarat and Amul is from Gujarat, so he used to talk about how cooperatives have the potential to change the nation, and they do. But have we done a lot in these last 11 years as far as cooperatives is considered? I don't think so. But maybe we'll do it now. The thing is, India has so many problems. That it's just impossible to solve them all. Right? Just yesterday, I was driving and the car almost drowned, man. The car almost drowned. Money started pouring in from outside, almost, and it was just unbelievable. And in the midst of all of this, when we were scared, like a car coming from side, on the truck coming from the side, literally lifted the car in the water. So it was a boat for a while. And I was like scared, right? Everybody's scared. But at the same time, we saw a few kids, dancing and, in the rain, and they're literally dipping in. And this is not good water. I mean, the drains are stuck, right? So this cannot be good water. But these kids were happy. And then suddenly an SUV guy comes, and he just rushes past the water. Now, ideally, you shouldn't do that. This is like bad manners, right? People are struggling on the road. So obviously, it's going to create a wave and then people are going to drenched badly. And that little kid literally got swept away in the rain. But then he somehow came back and he was laughing and, he got a free swim. So this country is especially screwed, man. Oh my God. Good, bad, ugly. 50 Shades of Pain, Panic, out of stock. By the way, guys, Microsoft is the second $4 trillion company. $4 trillion company. Microsoft is a $4 trillion company now. Nvidia was the first $4 trillion company. Now Microsoft is there. And Microsoft and Meta have rallied, and they've lifted the Wall Street up like anything, because they have a lot of weight, right? So Microsoft is essentially looking like a new age cloud provider. It's suddenly looking very profitable despite the heavy investments in AI, and it's crazy. And Facebook, Instagram parent, also surged 11% after it crushed the particular earnings call. Now, you know why Peter Thiel sold Facebook stock when the company was roughly over $100 billion? Do you know why he did that? So Peter Thiel was the first investor of Facebook when the company was barely worth a few $1 million. That's when he came in, right? And then he stayed as an investor. He was at one point a major investor, a major stakeholder in Facebook. But then, he exited because in his mind, success was $100 billion. He said, I had a path. I knew the company was worth very, very great amount of money, right? There is a path for every company to go from 100 million to 1 billion. 1 billion to 10 billion. $10 billion to $100 billion dollars. Now that path was clear. But when it became a $100 billion company, the question was about it going from 100 billion to where, right? At that time, there were no trillion dollar companies, right? There were trillion dollar, Apple barely became a trillion dollar company. And in his mind, 100 billion was the cap for success. That was the ceiling, right? So he didn't imagine Facebook to become like a trillion dollar company. And that was the failure of imagination. And now we're seeing these big companies get so big that they might just become $10 trillion companies tomorrow. And that wouldn't be surprising. So moving on. Income tax department digging deeper on the Jane Street case. Not surprising, we talked a lot about Jane Street. The short of it is that Jane Street was making money in India, but the Indian entities were essentially just making the loss-making trades, and the profit, the $4 billion profit, most of it was being registered in the companies. So the trades that those companies were executing, the Malaysian, or was it Mauritian and Singaporean company, they were making the profitable trades. So those were the companies which were doing the $4 billion profits, right? So Indian companies were just taking the loss trades. The profit trades were those companies. So they were essentially making $4 billion in 2 years from India, but not paying any taxes. So permanent establishment is the clause which gets invoked here. That where is that permanent establishment? And you can't be doing this. So moves on. Let's move on. Reliance is spinning off the consumer business. We talked about this. Reliance Consumers, they're the Campa Cola kind of play. They also acquired something from Baidyanath just yesterday. And they're going heavy on the consumer business, right? And they are listing that company separately because they are a part of Reliance Retail right now. So they want to go away from Reliance Retail, go as a separate company because it will help them raise a lot of money, and the growth multiples on that company will be better than, let's say, a retail growth multiple. So what they're doing is they're taking the investors along. The shareholders in Reliance Consumer, the investors, they'll be a part of this new entity. Otherwise, they could have just squared them off, taken them away, kept the company for themselves. But Reliance holds the family holds, RIL holds 83%, 9 global investors own 13%, small individual investors own 3.5%. So they're taking them along, which is good. Electronics companies bad for PLI as tariffs fears loom. So we've discussed this a lot. Electronics companies are playing, oh my god, with tariffs we're going to die, so you've got to save us from dying, and so on and so forth. So that's a continuing story. We need not repeat that. We've talked about this enough. These people are really asking the government to not stop the incentives for electronics, because the cascading effects of that, second order effects, everything depends on second order effects, right? It's gonna be bad for the entire story. Moving on, gold demands fall 10%. Demand falls 10% in June quarter as prices shine too bright. Well, gold prices are up, obviously, and gold prices are up for a reason, because there's a lot of instability in the markets and people are generally scared about what's going to happen tomorrow, right? So gold prices are going up, which is bad news for people who sell gold, right? Because they won't be able to sell gold that way, retail way. So demand falls 10% in June quarter, prices shine too bright. Everybody's stocking gold, right? RBI bought gold, China bought gold, the Reserve Bank. Indian families were wanting to buy gold, but they're not doing that anymore. So no surprise there, we've discussed this a lot. Moving on. Demand to recover gradually, says HUL. Imami, by the way, also showed a 9% rise in profit. The company posted consolidated revenue stood nearly unchanged. Couldn't grow the revenues, but profits were okay. By the way, in another story, Donald Trump has succeeded in imposing US tariffs globally now, But this won't last as nations will learn how to retaliate, says an economist. These people have been wrong about everything. They said that, the tariffs won't happen, he won't do that, and he can't do that. But he did that. He says, you got to give him credit. He said he'll do that, and he did just that. And it's working for now, but it'll not work later. So, one thing I've learned in this life is to never trust the economists, and these social science studies. So these people are, for the lack of a better word, lame. And the people who are actually the practitioners, they have better insights on everything. The people who actually struggle on the ground, they have the best insights. Speaking of a study, these people did a study where they found out that people who are sexually more attracted to each other, their relationships last longer. Their marriages and relationships last longer. So, SciPost reported this study from a big university, and they said people who are sexually attracted to each other have longer relationships. Now, can you guess how they could have saved some money on that research? Can you guess a way where some money on that research could have been saved? You can think about that, right? You know a way where they could have saved some money, don't you? I'll take a sip. Hi, Mr. Mr. Chirag Patil comes from nowhere. He springs. Good morning, Mr. Patil. He says, hi, they should join this live session and ask you. Right? Mr. Tiwari, pay to like, I need the money. I gotta feed the monkey, I need the money. I'm well off, but I need more money. Everybody needs more money, right? So instead of conducting these bullshit studies and spending like hundreds and thousands of dollars, maybe millions of dollars, just give the money to me, man. Give the money to me. Like, if you have like $1 million parked for this study, where you're gonna ask whether sexually, driven relationships last longer, I'll say yes, save the money, half of it, yes. And that would have been the end of it. But I got no money. What to do. But with that, let's come to the end of the 68th episode of Thinker's Frequency, the daily mental workout, the daily dose of insights and analysis which don't lead to paralysis right before we punch in. It's 9:09 right now, 9:10, not 9:11 today. Right? I wish you a beautiful day personally and professionally. I'll see you tomorrow. I had a lovely time talking. Mr. Tarun, Mr. Kale, Mr. Tiwari, Mr. Perspective, Mr. Jindal, Mr. Patil, thank you so much. It was beautiful talking to you as always. I hope you had fun, and I'll see you tomorrow, same place, same time, hopefully. Bye-bye.